here from the NASDAQ has been Roku. Snap is trading below its IPO price. That was one of the big headline grabbers last year, but Roku very quietly continues to move higher, even as we all wonder about what is happening in the streaming space. So we're getting closer here, still not quite there as the underwriters look to try to get the best price on this IPO. Kelly?
Yeah. Hey, Bob, what's taking so long?
Well, this is not easy to price this. First off, there's tremendous amount of retail interest here. So you've got a lot of people going back and forth. And down on the floor here, what happens in this situation is you've got people waiting at the last minute to figure out where we are. So you don't want to get in too early and throw all your cards in. And then you get back and forth. So all of a sudden, people are looking at $29, and now they're trying to figure out how to squeeze, frankly, the last little blood out of the stone. That's what, right. Remember, that's the purpose of the underwrite. Here we go.
We actually have an open.
Woohoo!
What is that?
$29. $5.79 million.
We got a 40% off.
Hi guys, yep, the opening trade was $29, but as you can see, there's still follow-on interest here. And that pretty much says it all. A very successful IPO. One of the biggest pumps here, a 40% pump here at the open. Of course, Drew Houston there high-fiving some of the other executives. Hopefully in a few minutes, he will be sitting down with Deirdre to talk about this very big day for them. Back to you guys over at the NYSE. Oh, wait,
Dropbox is over $30 a share right now, a 44% gain. And this, by the way, coming after one of the worst market days we've had, and a terrible week for tech. Don't you think, Deirdre?
Yeah, absolutely. But keep in mind that some of the other pure cloud plays have fared a lot better even over the last day or so. Box, one company that Dropbox is often compared to, actually closed slightly higher yesterday. Atlassian, another comp, didn't do so poorly. Want to mention who is making money here. You saw Drew Houston, co-founder and CEO. He has a 25% stake. Sequoia is one of the most prominent VC firms in the Valley, has a 23% stake. Rash Ferdowsi, that's the other co-founder, he has a 10% stake. There's also Accel and T. Rowe Price. So these are some of the folks who are making a lot of money here. The stock up nearly 45% on its debut. Remember, it was priced at $21. So I don't know, guys, what do you think? Does this mean perhaps that there was some money left on the table? Mike, maybe ask you that.
You know, it's always, it's part art, part science for these things. You certainly want to leave some upside out there after the IPO price. You don't want it to just max out every dollar. I think from the initial buyers, this is probably a larger pop than the underwriters go for, but you can never manage it perfectly.
Yeah, and I would point out that 3 days ago, the price talk was 16 to 18. They upped it to 18 to 20, so we're almost 100% higher than we were on the low end of the expectations 3 days ago. I would point out, I always like to point out what the insiders are selling at. The average insider selling price is $1.78.
Wow.
$1.78.
That's their cost.
Yes, that's what the average. Now, there's been a whole series of funding rounds, obviously, so they're mushing this all together. But they're required to publish this in the S1. It's one of my favorite things to go to. Who's really cashing out on an average basis? Now you see why the cheering is still going on.
One of these,
that's my point.
One of these deca unicorns, as Byron called it, makes up for a lot of dogs. I mean, that's the venture capital business.
Hey, Byron, if you're still there, how do you think this is going down in your neighborhood?
I think this is a great sign, and it's funny, you debate the pop, and certainly that 15 to 25% is typically what you like to see, but the end result is outstanding. We're sitting here with a $12+ billion company, a high free cash flow, reasonably high growth business that's in this borderline between consumer and enterprise cloud. Congratulations to Drew, to Arash, to Dennis, the early investors and the full team on a job well done. This is a great milestone for them.
Byron, you know, I'm not going to make an exact parallel with the kind of business, but 1 year ago, a little more than a year ago, MuleSoft went public at 17. Salesforce just announced they were buying it, I think, at 44, 45. After the stock itself had a great run. Is Dropbox destined to be part of something bigger at some point?
Quite likely. If you look at the mathematical probability, they'll probably have acquisition offers all the way along the way, including when they were private. Apple quite famously tried to buy them early on, and Drew resisted. And so this is one of those companies as a true horizontal platform that could be appealing to a lot of suitors that are trying to buy their way into the cloud computing space. We saw record M&A over the last couple of years in the software industry, including the Microsoft purchase of LinkedIn, which was the largest transaction in history. And so you can absolutely bet that a number of those large suitors who are late to the game are going to view this as one of the few at-scale platforms they could use to get into the industry.
Well, I don't know if we want to take this off. It was just interesting to see what was happening with box shares at the same time. Actually, they've tended to rise and fall together. Deirdre?
That's right, and I mean, Dropbox has actually been trying, both companies actually have been trying to distance themselves from one another. Dropbox saying that it's more collaboration. Of course, Box is more enterprise-focused and Dropbox more consumer-focused. But I have a question for Byron. He mentioned that famous story about Steve Jobs once wanting to acquire Dropbox and Drew Houston saying, no thanks. But I wonder if things have changed now. You look at Google and Microsoft and Apple. They all have these, pretty beefy cloud consumer arms and productivity suite. So do you think things have changed? What's stopping one of those companies from putting more of their focus into that area and perhaps killing off a Dropbox?
Well, the thing that's changed is that people realize this is a must-have now. This is a ubiquitous part of the cloud ecosystem. Enterprises and consumers alike need cloud storage, and so there will be multiple long-term winners. Google has a fantastic offering at the low end, which is where Dropbox tends to compete the most with them. You get into the Box and SharePoint ecosystem at the higher end, and that's where enterprises are tending to look. But it's a wide open landscape, and both sides of this broad spectrum need solutions. And so the competitive battle is absolutely heating up, but so too are the stakes. This is one of those few $100 billion plus markets that will be a permanent part of the cloud ecosystem.
Byron, thank you. Let's go back to Bertha now. On the floor, the company trading up 42%. Bertha, very nice pop.
A very nice pop indeed, and a very nice pop for the NASDAQ, if you will. This is their fifth tech IPO this year, and they have more in the hopper. There are 40 companies set to list here. Next week, we'll see a very big one. The Chinese version of Netflix, it's called iQIYI, and that one is set to have a valuation of about $2 billion. So we're seeing some tech unicorns in the hopper, and certainly the fact that you had Zscaler last week, that got an 80% pop after popping above the scale. And now you're seeing Dropbox, very successful sort of tech pipeline potentially here for the NASDAQ.
What were you just saying?
Well, I think it's a bittersweet moment for Apple. They were very interested in Dropbox for a long time, and they were interested for a very good reason. Apple's own file sharing, and I'm a big Apple guy, their file sharing service is not as good as Dropbox, and Apple users know that. I'm sorry, no disloyalty to Apple, but they're just not, and I'm a Dropbox user because of that. No, I think Apple's looking and saying, we should have been more persistent.
Yeah, this is sort of the rare kind of cloud play that has consumer recognition, to an extreme degree.
So many of these companies seem like esoteric, sort of they're the back end of the cloud. They make for some great IPOs, but they're less familiar. By the way, box shares, just checking on those this morning, are actually down about 4.5%. So
It's a chance to name to RiseBox. RiseBox and Dropbox.
Cute.
Meantime, Dropbox on its debut at the NASDAQ up 45%, and it is over the $30 mark. And Bob, that does compare with the initial talk that it would price somewhere between 16 and 18. So my only question to you would be, we've seen in the past sometimes the better they do in the first day, the more of a hangover there can be in the first couple of months, and vice versa.
Yeah, and you'll find IPO people, in fact, will often start talking about how the IPO performs after the first day, because that's when it settles down and when you start seeing real things. It's often very difficult for average retail people to go out and buy this immediately on the pop right now. So everybody who's sitting there saying, oh, they're all up 30%. There's not a lot of people who are able to get this right at the open like that. So bear that in mind. There's a little bit of unreality about showing these prices at these
Well, it can be a double-edged sword when you have as good a debut as this. We've had many companies, let's think of some of the notable ones in the past, who've had a great first day, a little bit of a hangover, but maybe we can ask Drew Houston himself about all this and about his plans. CEO of Dropbox, sitting down with Deirdre Bosa as their shares open on the NASDAQ. Deirdre?
That's right, guys. We had to pull them away from the celebrations and the champagne that I'm sure is flowing freely here now. A very nice pop. Congratulations, by the way. Are you feeling really excited?
I'm feeling great.
You said it was a bit of a reunion, right, with early investors and Dropbox members. Great. Well, I can't help but note, you guys are one of the oldest unicorns around, more than a decade. Not you yourself, your company. Now, why did you wait so long to go public, and why now, especially with the markets being so volatile this year?
Well, we're ready, and this is a step that we've been working on for a while, and we look at the iconic tech companies out there, and you look at, most of them had even more impact after they went public, and we've been spending the last few years getting to a really great balance of scale, profitability, and growth, and so it's time. We're up in the big leagues.
Absolutely. Now, we've been talking about this all morning. You guys are in this unique space. You're a consumer name, almost a household name. Lots of people use you, including our Bob Pisani. But the money here is in enterprise. I know you guys have been moving into this space. How quickly do you need to do that or scale? And how do you plan to differentiate yourself from some of the bigger players in this space, like Salesforce?
Yeah, well, we have a great model. And we like to talk about, we're taking the best of our consumer roots, and basically taking the consumer internet playbook and applying it to business software. And so combining the virality and scale of a consumer company with the predictability and monetization of a SaaS company, and the two together is a powerful combination. So really efficient business.
And I think you see that in your sales and marketing costs,
Yeah.
right? How has the consumer angle allowed you, or how does it allow you to get in with enterprises?
Well, it's through scale, right? So we have over 500 million registered users, and since the beginning, they've been bringing us into millions of companies. And so we have over 300,000 paying Dropbox business customers. And it starts really simply. So you start using Dropbox at home, you bring in the work, start sharing and collaborating with a team on a project, then that team becomes a department, becomes a whole company, becomes a whole industry.
Okay, now leading up to this IPO, I couldn't help but notice, you know, especially in your S1, you wanted to be compared more to an Atlassian or a Google Drive. We spoke to Aaron Levy earlier this week with Box, and he said his advice to a stick-in consumer. Clearly, he's a little bit worried about what you guys are going to do. But an Atlassian and a Google Cloud, those are platform companies with productivity tools, suites like Google Drive. How do you convince investors that you guys are more than just file sharing?
Well, since the beginning, I'd say our investors are really excited about our model. And they look at a company like Atlassian, and there are some big similarities. So 90% of our business is self-serve. That's how we get to that efficiency in terms of sales and marketing. But one thing we do on top of that is we also have scale from our consumer roots and from the viral growth. And so we're able to acquire the huge numbers of business customers a lot more efficiently and at much higher scale than conventional.
Okay, in terms of those productivity tools, though, I know you guys have something called Paper, which is your version of Google Drive, but we didn't see any numbers in the S1. When are you going to sort of tell us how that's doing, and how, or can you give us any color on how users are adopting? Sure.
I mean, Paper, we're really excited about Paper. We've launched about a year ago, and since then our users have created millions of Paper docs. Some pretty cool examples. So if you see in the Roadshow video, it turns out Saturday Night Live is an early adopter of Paper. And so they produced the show in Paper, and it's transformed how they work together. And then other customers like Pinterest is an early adopter of Paper. And so we find that Paper often lands with design teams or product managers who really love the simplicity and the design. And then it spreads from the design team to the marketing team or to other teams in the company. And next thing you know, the whole company's running on Paper.
So can we expect some numbers perhaps in your first quarterly
We'll get there.
filing? We're not sure. First quarter? Okay, now I know that you were close with Mark Zuckerberg and you go to him for advice. Have you reached out to him in the last few weeks, especially in light of the Cambridge Analytica stuff going on?
I haven't talked to him in the last couple weeks, but yeah, he's been a great friend and given me advice on this.
Did he give you any advice about becoming a public company CEO?
I think when we've talked about it over the years, I think the best thing you can do to build a successful public company is build a great company. And so that's what we've been focused on over the last few years, just really building in the infrastructure to be at $1 billion scale.
Okay, and I have to ask you, because you are friends with him, what are your thoughts on what's been going on at Facebook and how he's handling it, especially when you yourself are in the business that involves so much data security?
Sure. Well, I mean, trust is top of mind for all of us, and it's really important that we all can trust the services that we use, and that's certainly true for us, and it's true for anyone. So I know Mark and Cheryl and the team are on top of this, and they're going to figure it out.
And how do you think about that now that you're a public company and you're going to be communicating with investors and everything you do is sort of going to be in the public? How do you make sure that all of your data is secure? Are you thinking about it any differently now, given what's been going on?
Well, security has always been top of mind for us and for our customers, as you can imagine. People are storing their most important information on Dropbox, and our scale means we can make huge investments here. So we have a phenomenal security team. Some of the best people, the best technical talent in the world. So, and that's been true. That was true as a private company, and that will continue to be true as a public company.
Okay. Now, a lot of bigger competitors, and I know you kind of identified them in your S1. They've are doing now and really getting into this consumer space, what you guys at Dropbox have been doing for years, Google, Microsoft, Apple, to name a few.
Sure.
If they really focus their attention on it, what's to stop them from taking over your business?
Well, we've always lived in a competitive environment, and so literally since founding the company, we've always had competition, and in particular, some of the larger companies have been competing with us in a big way since 2011, and importantly, all of our growth has happened in that environment, right? So the competition is not a new thing for us. And our customers turn to us to tie together all these different ecosystems and cloud tools that we're using, because the days of using one stack or one ecosystem have been over for a long time. And so we talk to our customers and they're like, hey, can you give us a cloud to sync our clouds?
And was your partnership recently with Dropbox, with Google?
Yeah.
I'm sorry, was that a part of sort of avoiding that push? If you work with them, they're less likely to.
Well, that's the other thing about our competition for us is not zero sum. So in many ways, great companies like Microsoft, Google, Salesforce are partners, and we share a lot of customers, and we really care about building a great experience for them.
Now, as a private company, you could sort of avoid the Amazon so-called Death Star, as one called it. But now you're a public company, and we've seen, we watch this on a very regular basis on CNBC, what the mention of Amazon going into a business can do to the stock prices of other companies. Does Jeff Bezos keep you up at night? Is that something that you're going to be worried about as you become a public company, what he's doing, and if he could ever sort of infringe on your space?
Well, I mean, I really admire Jeff and everything he's done with Amazon, and Amazon Web Services has been an instrumental building block for us. Or we would not be here if the public cloud hadn't come to life or hadn't been rising at the same or when we founded the company. So, we don't see Amazon in our space. I mean, things can change, and we don't count anyone out. But at the same time, building a business and a product like this takes time, and so we have over a decade of investment in the space. And you think about the number of dollars that we put into building our products. We think that we're investing more really than anyone in the world on this problem.
Now, we acknowledged this morning as well. Steve Jobs once wanted to buy you. That was back in 2009, right? You said, no, thank you. Have you ever considered selling since then? And especially in light of what Salesforce just did with MuleSoft this week, how would you feel about being acquired in the future?
Well, I mean, here we are today. So day one as a public company, so we've chosen the independent path, and so we think we're really proud of the business we've built, and we know that we have a lot of opportunity in front of us. So. It's day one of life as an independent public company.
Let's talk about your finances a little bit. I know more than $1 billion in revenue last year, and your losses are narrowing, but they're still pretty hefty at $100 million. How do you plan on scaling those down? How do you plan on becoming profitable?
Well, our business has been growing well, and you can see, and certainly for measures like free cash flow, we've gone from an investment phase a couple of years ago and consuming a lot of cash to now this year generating a lot of cash. And so we're disciplined both in terms of our costs, and we've made big investments in areas like our infrastructure, and so we've been able to get big savings there. And then we've been focused on building a pretty massive self-serve engine, and taking advantage of our virality and our scale, and really innovating on our go-to-market compared to the typical SaaS company.
Okay, Drew, thank you very much for being with us. Shortly after, I'm sure you're eager to get back out there and mingle and celebrate, but congratulations today on the debut.
Thanks for having me.
Guys, back over to you, and I should note that Dropbox shares now up nearly 50% from that opening price. That's going to make you feel pretty good.
All right.
You just said all right.
I'm tempted to ask him what he's going to do with the money, but there's almost too much that you can do. You can pick one of a million things at this point, Michael. Anyway, the Dropbox shares are now over $31.
It's a good problem to have.
Even as the broader markets have now turned negative or are selling off.
They are. They turned around. It seemed like there were some comments out of the Chinese ambassador, kind of